Zimbabwe's Reserve Bank governor has said that the lending restriction placed on banks is a temporary move to contain inflation and stabilize the country's economy. President Emerson Mnangagwa announced the ban just days ago, citing the need to discourage speculation against the Zimbabwean currency, which has been dramatically undervalued on the black market. Reserve Bank Governor John Manguja said that the bank realized how difficult the decision would make things, but that it was an essential step. He also pointed out that some businesses were now buying foreign currency with bank funds. Zimbabwe's inflation has begun to surge once again, with year-on-year inflation reaching 96% in April, up from 61% at the start of the year, owing mostly to the fast depreciation of the local currency. In a research report, analysts at Bank ABC, the local subsidiary of Pan-African banking firm Atlas Mara, warned that the lending freeze threatens the country's banks' viability. Today, we look at Zimbabwe's bold action against currency speculation. This is Business Edge. I'm Tolulope Adeleru-Balogun. Joining me from Harare, Zimbabwe is Denford Mutashu. He is the president of the Confederation of Zimbabwean Retailers, and looks like a very sunny day there out there in Harare. Denford, thank you once again for joining me and welcome to Business Edge.
Thank you for having me once again.
So let's start with the inflation numbers, because often when we talk about Zimbabwe's economy, we always do have this conversation around what the numbers are saying. So annual inflation dropped from a peak of about 761% in August of 2020 to 50% in August 2021. And that's a massive decrease. But it started this year around 61% and has now again risen to around 96%. To get the inflation rate to drop so much between August 2020 and 2021, what were the things that were done and what's now causing this renewed rise? Let's not call it a surge yet, but this renewed rise that we're seeing.
I think there were quite a number of physical and monetary interventions that was done by the central government, and that also include containment of money supply and the supply growth across the economy. And that also, saw the, emergence of the auction system that began to support the productive sector through a predictable, market where businesses could access foreign currency. Because remember, back then, we had businesses buying foreign currency from the alternative market, which is the gray market, and that actually continued to push the inflation, push the parallel market exchange rate, and got us to a point where we needed to come up with an auction system, which has supported the productive sector. Capacity utilization currently sitting at 65%, having jumped from 34%. And we also, have realized a lot of, traction in the agricultural sector as well as the mining sector. And of course, right now, we are faced with quite a number of issues, including the global issues like the Russia-Ukraine war that is also constrained, supply chains. And that has also led to some push factors as far as prices of basic goods and commodities are concerned. But locally, we also have a rapid accelerated program, road rehabilitation program that is actually taking place, and it's a huge, massive infrastructure program that government undertook, which has actually benefited a lot of the road network and a lot of areas in the country, which businesses is happy about. Unfortunately, the payments are made in local currency, and there is also a strong belief that after the payments have been made, some of the contractors may have also been going onto the parallel market to quickly exchange for the US dollar so that they can store value in the payments that they would have received. But other than that, we also have a lot of arbitrage and speculative behavior that has also beset the economy and the economic agencies, businesses, individuals, etc. So those are some of the areas that we may have seen that the inflation rise is as a result of the activities on the shadow economy, as well as the parallel, which is actually driven by the parallel market.
All right. So we know that in the conversations me and you have had, there have been several meetings to address the depreciation of the currency. There are meetings that involve the Reserve Bank, ministries of finance, industry, and commerce, business leaders, banks, and organizations such as your own, the Confederation of Zimbabwean Retailers. Was there a meeting to discuss this particular decision that was taken over the weekend by the president and by the Reserve Bank of Zimbabwe? Given the fact that there have been ongoing conversations across the table, was there one on this particular decision?
Well, I think collectively there's been discussions going on behind the scenes, but of course on this particular decision, it is the presidential pronouncement which of course we have taken board decisions to try and comply with, working with all the regulatory bodies. And remember, he's the president, and sometimes when faced with challenges like price escalations on the basic commodities, as well as the general goods and services across the country, the president has got to take a decision that would actually, even though it may be painful in the short term, but we also believe that in the longer term, it has got the capacity to reduce the money supply growth in the economy. Because remember, in certain circumstances, we actually had individuals who were holding quite a number of bank accounts with different banks, and they don't have a manufacturing entity, they don't have a business that they run. And that is currently obtaining, where the shadow market has been driving the parallel market exchange rate. Dealers, foreign currency, dealers have also been driving because they've been making huge profits. And even some corporates, they've also been complicit by taking money from the auction system at the official rate, and of course taking it out or deploying it in the foreign currency market, foreign currency parallel market to make it lending. The ban on lending, it's actually something that is quite progressive, if you ask me. Why? Because a lot of people have been borrowing from banks and at 80%, interest, and of course take the money out, buy foreign currency from the parallel market, keep it for a week or two, do whatever that they do to drive the parallel market exchange rate, and offload and pay back the loans. So it has now been used as a hive by those speculators to borrow money and use the money from the banks, to actually augment their activities on the parallel market.
Okay, let me draw from Nigeria's experience, because we've had not as massive as the scarcity as Zimbabwe has, but we're having that experience. And we've seen what the CBN has done in terms of pushing everybody online to fill forms to show that you have a need for the US dollar, for this Forex. That has to be a legitimate need. Has there been anything done beyond the Forex auction to ensure that those who are going to the banks and who are collecting the money have the legitimate need for this Forex?
I think that is a process that is currently going on to, audit the auction, as well as the quality of the bank accounts that all the banks are holding, so that you could separate, quality, or rather genuine, bank accounts from fictitious ones that are held by those people that have been driving, the speculative mode across the country. Because remember, their interest is not national. Their interest is, it's just their selfish, interest to save their selfish interests at the expense of the general public. And you may also look at, the current environment that is obtaining. Salaries have not been moving as much as at the pace at which prices have been escalating across the country. Right now, I was looking at cooking oil. Now, a 2-liter bottle of cooking oil is actually going for 1,900 Zimbabwean dollars. if you calculate using the official rate, it can actually come to 10 US dollars. But of course, if you use the parallel market exchange rate, it can come to around $4.09, or rather $4.90. So I think for an ordinary man, for an ordinary woman, and an ordinary citizen on the street, it is quite huge a jump. And it is also quite pricey, because the majority of Zimbabweans, of course, 80% informal, they actually live off the informal activities that they do day by day. But of course, for those that are employed, especially the bulk in the government, in the civil service, they won't be able to reach those prices. I've just given an example of cooking oil, but just generally everything has actually been going up every week. And it is now a scenario that required the president to actually come firm, or use his hand to ensure that at least everything could stop. I don't mind if everything stops now, and then we clean up the mess, and then we can start on a clean slate. I think this is something that is quite progressive that the president has done.
Okay, and I like the fact that you say that you believe it's progressive, because that's what I wanted us to get to next. The feedback on the decision has been a bit mixed. Some have said that they believe this is actually going to worsen the economic situation and actually embolden those who are operating in the black market. But you believe this to be a progressive decision, and that Zimbabwe should maybe at the end of the day just scrap everything and start all over again. So, Denford, I'm going to want you to expatiate on that, but that will come after the break. How really progressive is this decision by the presidency in terms of what to do? And then the president has also made some claims as to what other things are fueling the depreciation crisis of the currency. So I want us to get into that when we come back from the break. You're watching Business Edge, and the conversation is on Zimbabwe taking an interesting and bold move to curb currency speculation. My guest says he believes it's progressive, and he'll tell us why after the break. And still with me today is Denford Mutashu. He's the president of the Confederation of Zimbabwean Retailers, as we look at Zimbabwe's decision to freeze lending to banks. Now, the decision to suspend banks from lending has been criticized by some in Zimbabwe. The Zimbabwe National Chamber of Commerce describes it as legitimizing a parallel banking system with its own exorbitant rates. But right before the break, we heard Denford talk about the fact that he believes this is a progressive move, and at the end of the day, possibly that Zimbabwe should scrap everything and start all over again. So, Denford, I really want to get into why you think this is a progressive move, when there are a number of institutions and organizations in Zimbabwe who are saying that this is actually just going to legitimize the black market and worsen the economic situation for Zimbabweans. So why do you think this is such a progressive decision on the part of the presidency?
I think it will save the poor. The ordinary man, the common man on the street is certainly going to, begin to feel that something is happening in terms of containing the spiraling prices of basic commodities and the general services across the country. And even the decision to retain the private transport system in the country. It is actually after the president has listened to the pleas of the generality of the public who have been waiting in queues for transport back to and from work each and every day. So it has actually been affecting a lot of productivity across the country. And on the lending, it is the few. You see, it is the few that are benefiting at the expense of the whole country. Even business. In our businesses, we don't enjoy having to receive the new price increase every day from your supplier, because it has been affecting a lot of businesses in terms of running exchange losses. So if the situation had been let to be, then certainly it was always going to escalate to some exponential levels that are unimaginable. And of course, the people were going to be, to continue to suffer. So I think the president has had to make a decision. And I don't think, the person of a president can actually just wake up and make a decision without facts and without Yeah, we want to know those people that have been driving the parallel market, because it has not been serving any purpose for us as business and even for the ordinary people in the country. So what also the president is committed is to clear the backlog on the auction system. And that commitment is something that we've also been waiting for, because we want the backlog to be cleared so that the productive sector, those deserving companies in the productive sector, can access foreign currency and deploy it for the purposes that they would have applied it for, not to go and buy luxurious, motor vehicles, and some have been also buying, properties across. So we want to make sure that the auction system benefits the ordinary people through responsible pricing across the country. And again, we also have quite a number of scenarios in the country where the 80% is informal. We also want to ensure that all those businesses must be registered and they will begin to contribute to the national good as well.
All right. So, Denford, you mentioned wanting to know those behind what is happening on the parallel markets and the speculation that's being driven. Now, President Mnangagwa has made some interesting claims around the reason why the currency has been failing in recent months. He says, one, because speculators are causing devaluation by borrowing money and then buying US dollars, which is something you've confirmed as well. But then he also said that there are other external players involved in weakening the country's currency. What do you make of this claim by the president?
I think that is a claim that probably is based on the information that the country would have gathered. I may not be privy to that, but for that which I know as a sector, all we try to do, and just as business, all we try to do is to ensure that we work for the national good. And even if you look at how strong the retail and wholesale sector is right now, and even the density of shops per given area, it has actually been increasing, both formal and informal. So basically, from our end as business, what we wish is for outcomes, to find out who those people are and who they've been working for. And certainly if they've been working with people from outside of the country just to ruin the economic growth and stability of the country, causing untold suffering for the ordinary citizens through escalation of inflation and the parallel market exchange rate, then certainly the law must take its course. We actually should not leave no prisoners. Anyone who may have been participating in this ruinous acts must actually face the law.
Okay, so we know that the banks have met with the president in order to discuss the issue and as well the directive. But do you think there's a middle ground to be found? Because there are many people who are wondering what the consequences of freezing lending may be. Do we even have a time frame? While we know that the Reserve Bank governor has said it's temporary, what's the time frame for that temporary freezing? What are the ramifications that you're expecting this decision to have?
Of course, there could be quite a number of ramifications that include confidence, in terms of policy consistency, policy predictability, and as well as the general doing business environment. And we also are quite busy right now engaging with our manufacturers and suppliers to ensure that the decision does not also lead to shortages of basic goods and services on the shelves, and people do not have to queue for those, because once that happens, they can possibly be a creation of another black market for the basic goods. We don't want to go back to 2007, 2008, and we can assure the Zimbabweans that we are not going to go back to 2007, 2008. The economy is very sound in terms of the productivity that is taking place in the country. In terms of all the productive sectors and the economic growth drivers like agriculture, manufacturing, as well as mining, they are actually powering. And we want to sustain that growth. And in doing so, we need to clean up the environment. And one way of cleaning up the environment is certainly ensuring that inflation is predictable, it is also stable, and it also we also have to reduce the shadow market's impact by at least so that it can actually be at least less than 10% to the general economic activities taking place in the country, because the shadow economy once it is let to roll, it will certainly overcome, just like it had almost done, the formal economy. And before you know, the lawlessness that has just been taking place within and outside the area of doing business, in addition, of course, to speculative tendencies that I highlighted earlier, it has actually been creating some situation that could not have been manageable in the future.
All right, so Denford, as I wrap up with you, I have to ask about where sanctions come into play with the economic situation of Zimbabwe. We can't talk about the economy, the hyperinflation that was so prevalent just a decade or so ago, and talk about potential progress if we don't also acknowledge what is an elephant in the room. There are still economic sanctions against the country. Do you think Zimbabwe would be in this current position right now if there were no economic sanctions against the country? And how have the sanctions exacerbated the situation that many Zimbabweans find themselves facing?
You know, if we didn't have sanctions, given the amount of work that has taken place, to base those sanctions, it is actually quite encouraging that Zimbabweans have been able to stand and ensure that the sanctions do not distract them. But I'm saying, if you look at the situation in the banking sector, more than 100 corresponding banks, stopped dealing with our local banks, and that is actually something that affects international payments because at the end of the day, it also reduces confidence, and those are some of the issues that we have been looking at. Even economic growth and the general uptooling of the industry, it could have been accelerated, just like we have seen the country right now is actually constructing roads, is constructing dams. It is also, focusing on increasing, the space in the tourism sector in terms of its performance and contribution to the general well-being of the economy. And now, if you look at the health and education sector sectors, those have largely been affected by the sanctions because currently you have seen that we have actually been reduced in terms of our capacity by more than 50%. We could have been actually far ahead of most of the peers in terms of the countries in the south if we didn't have sanctions. So what we've always called for is for the sanctions to be removed and to give us space, ensure that we can also be able to chart our destiny as a country. We are able to plan our future as a generation because those sanctions have been on us, on our yoke for the past 20 years. And so, of course, I don't think if they had to serve a purpose, what more purpose could they serve?
All right. And what more purpose could the sanctions serve as Zimbabwe looks to find its sure footing for economic recovery? Denford Mutashu, thank you as always. And of course, as this continues to play out, we will touch base with you. Do have a good one.
Thank you very much for having me on the program.
A sunny day in Harare to talk about the presidency's decision to freeze bank lending for now because of the fast depreciation of the Zimbabwean dollar. It's been said to be a temporary decision, one that doesn't have a time frame for now, but we'll continue to see how this plays out as Zimbabweans continue to be hit by different economic situations. You're watching Business Edge. Up next is NC4 to watch. And we're wrapping things up with a few stories we're keeping our eyes on. Starting in the southern parts of the continent, the South African rand firmed in early trade on Wednesday, but gains were limited as investors await monthly U.S. inflation data that could provide clues on the Federal Reserve's monetary policy stance. The rand traded at 16 rand 9 cents per dollar, 0.14% firmer than its previous close. Tanzania has announced a 100 million Tanzanian shilling fuel subsidy seeking to reduce fuel prices in the country with effect from June 1st, 2022. According to the country's Minister of Energy, January Makamba, the fuel subsidy will reduce government spending for the remainder of the 2021-2022 fiscal year. It is not expected to affect ongoing development projects. Uganda says it acquired land for the construction of East Africa's first nuclear power plant as the continent's top exporter of coffee beans attempts to expand its electricity generation capacity. In 2017, Uganda said that it would build a 2,000 megawatt nuclear power plant by 2030. And finally, the June debut initial public offering on Angola's Bodiva Stock Exchange is expected to unlock a wave of new listings. This comes as the Southern African oil producer forges ahead with a far-reaching privatization drive. Bodiva will begin accepting bids next week for 1.945 million shares, a 10% stake being offered by BAI, Angola's largest private bank. And that's Business Edge for today. Follow us on social media, download our mobile app, and of course, watch us on the platforms we are available. Until next time, 11 a.m. West African time is, of course, the time to join me as we put African business, the economy, and finance front and center. I'm Tolulope Adeleru-Balogun. Have a great day.